Welcome to your Mortgage Insider Update. It is November the 3rd. The Feds have spoken. They have cut the interest rate by a 1/4%. But what did Fed Chairman Powell have to say afterwards? Basically, through cold water or shut down any guarantee or any likelihood of there being a cut again in December. The Federal Reserve is leaning on no data as now their point of contention. They don't have the unemployment figures, they don't have enough information, so they don't want there to be a market movement towards the likelihood of another cut. So basically, Fed Chairman Powell said that it is not a foregone conclusion that there would be another cut in December. Primary reason being that there's just not enough information. So the market did not like that, even though we got a 1/4% rate cut. I had all kinds of phone calls, as that was happening the day after. Oh, I heard the Federal Reserve cut the interest rates. The interest rates must be lower. Well, we're going to take a look. Interest rates went up. This is very similar to what happened in September. Fed Chairman Powell starts to speak, and his words move the markets in the opposite direction than we were just going. Over the next month, we'll see, as the sentiment starts to come out, there will be some unemployment figures this week. The ADP private payrolls from ADP will come out on Wednesday. That'll tell the tale, the only tale to be told on unemployment until the government shutdown can come to an end. So let's take a look and see the reaction. So mortgage-backed securities start off in the red. 10-year Treasury bonds. The 10-year Treasury bond is the interest rate the federal government pays on their debt. Tracks very well with the movement in the actual interest rates that mortgages would follow. Longer term, most mortgages don't last more than 10 years. Even though it's a 30-year mortgage, most people will sell or refinance their loan. So the 10-year Treasury does track a pretty good direction of those mortgage rates. So as we can see, the interest rates were coming down in early to mid-October in anticipation of this Fed meeting and the Fed announcement of a rate cut. And on October 29th, just as the Fed chairman started his second sentence, we saw a huge rise that just kept climbing, hit the 25-day average at the end of last week. This was Wednesday. Thursday came out, convincingly above the 25-day average. Right now, we're bouncing in between. Started the day off a little bit lower, and so far have reached above the 50-day average, which, closing above the 50-day average, could be a negative sign that higher rates could be our new reality for the coming 6 weeks. That's how long it'll be before the next Fed meeting. If we go back in time just a little bit, look back in September, and this was the charts in September, right before they did their first 25 basis point cut. And we saw the market reaction was a stage higher in interest rate over the following 6 weeks or so until we got to the most recent announcement. So we basically coming into the Fed meetings, we can see that it's lower. It was lower than it was in market was trading back before the last Fed meeting. So we ended up coming down with lower in total interest rates than we had seen previously, but a pretty wild move higher, a significant move higher, I think specifically because the Fed chairman's words he didn't mince words at all. He said, don't count on there being, it's not a foregone conclusion that there would be another rate cut. So I think that's to read between the lines that they're not going to make policy before policy is due. And that won't come until December. So the market will absorb this information and trade accordingly as new information does come out, which could be limited for the time being. So with limited information, we're going to just hang on tight. And it's the winter season starting here. Less listings coming on the market, less homes for sale. A lot of sellers were probably hoping to see lower interest rates to make it more affordable for buyers. If you really want to sell your home in this market, you might have to have some concessions. And I think interest rate concessions, helping buyers buy down their interest rate might be the most beneficial in the current context. We're not going to get any outside influence to lower interest rates in the short term. So we'll keep an eye on it and bring an update next week. Be sure to like and subscribe to our page here, and we'll see you soon.